Nvidia is expected to report earnings this weekend. Investors are wondering, should they buy stock before the big day? There's a lot of YouTube videos out right now kind of talking about this same topic. But let me just say, don't be fooled. There's no way anybody knows how the stock is going to move, especially how can you value or how can you guess how the market is going to move on such an emerging technology, an emerging market like artificial intelligence. Now, don't worry, I am going to provide a lot of information in this episode, and I'm going to provide you with the metrics you need to keep an eye out during earnings that can determine where the stock is going to move. And this video should provide a lot of information if at the end of the day you are bullish or bearish on this company. So let's take a closer look in today's episode. All right, so we can see Nvidia on Friday ended about 1% down. The stock is sitting at about $131. A quick look at the 52-week high, the stock was sitting at $153, and in the 52-week low was sitting at about $86. Now, luckily, if you are subscribed to this channel, this should not be a question because more likely we were very, very bullish in this company during these massive downturns when the stock hit below 100, when the stock was sitting at $90. And everybody hated the stock. This channel was one of the few channels that showed a lot of bullish cases for Nvidia. So if you know me and my investment style, Nvidia is my number one position, out being my massive over 20-25% of my overall portfolio. Now, Nvidia is a company that I talk about a lot and say the following: this is a stock for the patient investor. And the reason I mean a patient investor is the AI market is always changing, always evolving. And sometimes the market doesn't understand some of the new technologies and new events coming up. For example, during the DeepSeek moment, we kind of saw the stock drop down to like 120s, 116s, the low 100s. We kind of saw similar things with the trade wars and stuff like that in March 10th. Then even more trade war issues in April. The stock has given investors opportunities on when to buy. And when kind of looking at risk to reward ratio, that's what I'm looking at. I'm looking at, while I am super bullish for Nvidia, I am not selling any shares. I am a little bit more careful on when I add. When it's extremely risk to reward ratio on my behalf, I like to see this as a massive buy. Now, right now, I'm going to be honest. I would say the risk to reward ratio is not in my favor, but it's also not overvalued. I would say for me, this is a stock that right now is in between. It's maybe safely valued. For me, I love it when it's a lot more on my favor. I like that, and I tend to buy stocks around those price points when I look at my risk to reward ratio. Now, the reason I say this is, well, I'm not excited about maybe the current prices as I was a month ago. I am still very excited about the long-term potential. I believe Nvidia in the next 5 years will be a much bigger company than it is right now. And I still believe that for the next year or so, it's going to be a company for the patient investors, that there is going to be random scenarios, random events that could give us better buying opportunities. It's not a guaranteed, but again, those are just my overall thought process. Now, the company is expected to report earnings, and let's kind of jump into my favorite data platform for stock investors at an amazing price. Make sure to check out my special offer at finchat.io. Most of the information we're going to look at in today's episode is going to be here. We're going to look at earnings guidance, at revenue guidance, at cash flow guidance, at valuation metrics, all in one platform. And the link is down below. Now, the first thing I want to look at is revenue consensus. And the reason we're going to look at consensus is if you follow the company like I do, you are going to understand what's happening just based on these numbers. And it's going to remind us of some of the past events that Nvidia has been hit with. So if we take a closer look for April, the quarter that's coming up, the overall consensus on revenue is about $43 billion. Now, there's no major changes here. This has kind of been the consensus throughout the time about that $43 billion. Now, I do believe Nvidia is going to do really well here and is going to provide some great numbers, might even beat expectations. But what the market is going to be more concerned is the guidance for the next quarter. So the guidance for the next quarter in overall consensus is about $45.6 billion. Now, if you look at a sequential growth, that is only going to be a $2 billion growth. And the main reason is the Chinese market. For those that are not familiar, most recently, Nvidia got hit with with extra export restrictions on China with the H20. And the company is taking a massive revenue hit because of that. And it's going to take a nice kind of earnings per share hit in this upcoming quarter as they are taking a one-time charge on some of these inventories that they believe they won't be able to sell. So this is going to be the first time we're going to see such a small sequential guidance. And this is what's going to be crucial. So the market right now is expecting the overall guidance, and that is for the next quarter to be somewhere around 45.7 billion. And the main reason, like I mentioned, is the loss of the Chinese market. Now, some people might kind of be mistaken and saying, Jose, I thought the Chinese market was back on for Nvidia. That's not true. We saw the destruction of the AI diffusion law, but that has nothing to do really much with China. It had a lot to do with other countries like the UAE, which we did get some massive bullish news from them. Now, again, the real thing is the guidance. Is Nvidia going to have enough demand to offset the loss of the Chinese market in such a short amount of time? If the answer is yes, and if Nvidia is able to outperform on the guidance of $45.7 billion, then I do believe the stock is going to be much higher than it is today. Obviously, we don't know when the stock is how the stock is gonna do the day before, but based on today's prices of about $130, if Nvidia surpasses this guidance of about $45.7 billion, maybe by an extra billion or two, which is not outrageous for Nvidia depending on their overall supply chain, then I think the market can rally dramatically. Now, guidance is the key. If Nvidia does lose out on this guidance and misses dramatically, this is going to be extremely bad news, and it's the time where I would say Nvidia creates that buying opportunity that I was talking about. The reason being is we have looked at all the channels. Every company is spending lots and lots of money on AI. Now, what's really important is Nvidia in the second half of this year is going to release the Grace Blackwell Ultra or the GB3 or the Blackwell Ultra. The Blackwell Ultra, let me just say, based on the channels that I'm following, the demand is insane. It is ridiculous, the demand that I'm seeing for the Blackwell Ultra. And to me, if there is a sell-off because guidance misses because of the short-term pain of the Chinese market, then I do believe that would be one of the greatest buying opportunities for the stock because in the long term, the strength is still there. I mean, just think about it. All these companies are investing dramatically in capital expenditure. We have companies like CoreWeave that never were part of this CapEx now becoming a major player. CoreWeave is expected to spend about $20 billion. Most of that is coming in the second half of the year. Can you expect why, or can you guess why? Because of the Blackwell Ultra. We have all these multi-investments in the UAE now coming with the data center solution. We have various massive data center projects coming out from the Blackwell platform. So to me, even though guidance might be weak, and if the stock price drops, that would be the time when it's going to be super exciting to add on the stock. Now, again, long term, I am super bullish, but in the short term, after earnings, this is going to be the most crucial number, that guidance. And again, if you want to see this type of information, make sure to check out finchat.io/Jose for great discount and a few weeks for free. Now, the second number we're going to have to look at, and I think this is what's going to play some numbers and might make some headlines. And I don't want you to get fooled, right? The last thing I want you to get fooled is by the media, by other YouTubers and other financial players that don't know this company like I do. So right now, the estimation of revenue is about 73 cents, the consensus, right? That is actually a sequential drop, and it's a small growth year over year. The media, if they see this number, is going to go crazy. saying, look, the slowdown is stopping. You're going to see a lot of fin Twitters, a lot of YouTubers use this as a form of clickbaity. And I'm going to say this is a quarter the company is going to take a massive hit due to that loss of the Chinese market. And they do mention that they're going to take a massive hit that is going to hit their earnings per share. Now, again, what is going to be more crucial is what happens on the guidance end. For the upcoming quarter or the guidance that they provide, it should be closer to 99 cents. If this is true, we can see that it was a one-time hit and we don't have anything to worry about. So this number will obviously impact margins. You're going to see a huge hit in margins. You're going to see a major decline in margins, and investors and other people are going to be saying margins is hit because of competition, because of low demand. But that is not the thing. So again, guidance is going to be key, and we want to see closer to a dollar. Now, if you are enjoying the episode so far and you are learning something, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of special offers. I'm trying to hit 75,000 subs by the end of the year, and this is going to be the best places you're going to find all the Nvidia, AI, AMD, and stock news that no other channel provides. Now, outside of earnings per share, another kind of, I think this is going to be one of my favorite, free cash flow. This is going to be a metric that it's not really going to take much of a massive hit from this one-time charge. Remember, the company is taking kind of like a charge on inventory, but in forms of free cash flow, that's not really a hit. It's not like they're paying anybody for that one-time charge. What they're saying is, look, I have some inventory built up. I'm going to actually have to write it off. Because I write it off, it's obviously going to take a hit on earnings per share, but it's not something like losing cash. You're not going to lose a cash. You're not paying anybody for this. You're just saying, hey, look, this inventory is sucky. I can't use it, so I'm going to write it off. So in theory, free cash flow should be unaffected by this. And we're expected to have free cash flow of about $21 billion. That is some crazy numbers. These are numbers that most companies aren't making a year. Some of the big Max 7s aren't even making this a quarter anymore because they're paying Nvidia. So free cash flow of about $21 billion is going to be a crucial number. I do believe this is going to tell us a bigger picture of maybe what's happening with maybe pricing power of margins or some other things. So free cash flow of $21 billion is going to be crucial. There might be some shifts. Some things to watch out for here is going to be inventory levels. If the company is building massive inventory for the Blackwell 300 or the Blackwell Ultra, that could indicate huge demand, but it might also mean that they might be paying a lot of stuff right now to have that inventory, to have that overall market serve for some time, and we might see free cash flow not hit this consensus. So we would have to look at inventory levels, inventory charges, and what they're trying to do here. Because if they're building a massive amount of inventory and they're paying for it up front, you would obviously see that in the free cash flow, but it would be a great indication, a massive indication that there is huge demand. So free cash flow is crucial. It's one that I, as a very strong investor of NVIDIA, is going to be very focused on. Now, we're looking at PE ratios and forward valuations for NVIDIA. At the beginning of this episode, one thing that I mentioned was that most investors, and I think it's very hard for anybody to be able to value the stock and tell you if it's a great time to buy or not. I don't think anyone should ever listen to anybody. I think everybody needs to make their own decisions. But you need to make that own decision with your own, with having some knowledge, right? You need to understand what's happening. And for me, NVIDIA is a company that I believe by 100% that AI is going to completely change the world, and NVIDIA is going to be leading that pack. But I don't know how that might change in the next year or so. So while I do believe in the massive growth opportunity, I wouldn't mind paying some great values at it in the short term of things. So forward PE right now, it's the next 12 months is sitting at about 31.8. I don't think that's crazy compared to the most of the Max 7. Again, I like this to be below the 30s, in the high 20s. We actually saw this many times in the past year or so, and this is the channel pounding that this is a very bullish time. Now, forward 1 year, which is the end of next fiscal year, is 23.3. There's no other company out there that is seeing these types of valuations, maybe outside of Google and Meta. But there's no one providing this type of growth and this massive type of free cash flow at the moment together. So to me, the real answer is, are you looking to buy NVIDIA for a quick flip and kind of a quick flip after earnings? If the answer is yes, then I can't help you there. I don't know the answer. It's all a coin flip and it's all dependent on consensus and guidance for the short term. And that can actually move dramatically with a lot of the news and a lot of the events that have happened in the past week or so. Now, do I believe the stock is going to be much higher a year from now, 2 years from now, 3 years from now, 4 years from now? The answer is yes. I mean, we saw those massive UAE announcements. We see the massive demand for data centers. We see the massive push of AI innovation. How can you not be bullish on a company like Nvidia that is trading at a forward PE ratio of 31.8? So, as a long term investor, I am very bullish, but I am very bullish because I understand and believe that the AI market is real. If I had any doubt of the AI market, then I would be a little bit scared of maybe some of these valuations and some numbers, because if it is, well, capital expenditure could go down, spending could go down, and that can obviously impact a lot of things. But by being bullish in this market, I am very comfortable holding onto my shares. Again, like I talked about at the beginning of this episode, one thing is this is a company for the patient investors where there's going to be various opportunities to add on, in my opinion. It doesn't mean I would not add on now. Everybody needs to understand their own risk to reward ratio. With me having 25% of my position already in this stock, maybe a little bit more, having such a low cost basis, it gives me the opportunity to say, Jose, I don't need to rush this stock right now. And even if I had a smaller position, I think my answer would still be the same. If I wanted to add, it would be more of the dollar cost average. Now, again, that doesn't come with the risk that this stock can't go up. I believe this stock can actually still go up and after earnings, but it's just not in my favor. So understand what you're going to do and understand that even if it doesn't work out, you're okay with your decision. So again, overall, super bullish in the stock in the next 5 years. In the short term, it's all about guidance, and no one has that insider information for what they're going to guide for next quarter. But if it is super strong, the stock, in my opinion, can hit some new heights within the next few months. If guidance is weaker than expected, oh man, forget about it. You're going to keep hearing it in all the media channels. All the famous fin Twitters are going to tell you, see, I told you this was a bubble. But when we hear that, I think this is going to be the best place to tell you, those people are wrong. And we're going to see in the next year or so that Nvidia continues to dominate the AI space. So again, make sure to hit the thumbs up, the subscribe button, check out the pinned comment for special offers. Make sure to check out finchat.io as well. Peace out.